from the start, the main feature to focus on is this gap up that gets filled, and due to the overwhelming downtrend, the chart breaches lower. So of course, the previous gap fill range now becomes an immediate resistance area where some familiar bearish candles form. Here's a gap down with the candle we're focusing on in this section, the inverted hammer. It has a longer lower wick than normal, but the longest proportion by far is still its upper wick that shows brief sentiment to drive back up. Though no reversal comes of this, since the following candles immediately form to close well under the high of this inverted hammer candle. Nonetheless, it still signals major opposition to the established downtrend. Though since there's no bullish reversal, it mainly defines the transition to this flatter movement, where at the bottom of the range there are more examples of general inverted hammer candle structures. Not the best proportions, but the upper wicks are still significantly longer than the lower wicks, which are about equal in length to the candle bodies. Then price goes relatively quickly above their highs to carry on this initial intent of bullish sentiment that began with the upper wicks. However, in the broader context, the downtrend prevails once again, and unsurprisingly, when dropping through the mid to low 30s, there is still at least some minor delay due to the remaining influence of the previous reversal area. In this case, there is a very minor incline as price moves above the high of an inverted hammer that is also bullishly engulfed. But it's a weak counter to the large red candles before and after it, which also have much higher selling volume. The last red candle has some bull hammer qualities, but our main focus here will be the candle after it, which has very high volume and clear inverted hammer characteristics, which are immediately built upon further with the next close above its high to strongly affirm bullish sentiment in the short term. Because naturally there's strong resistance nearby from the influence of the previous bearish continuation, which does drive down price with regular retracements. However, a steady uptrend does eventually develop since price held firmly above the inverted hammer's low. Later, it's quite normal to see a distinct decline emerge once again due to the influence of the larger downtrend and the gap down from earlier. With this newer gap down, we've found another inverted hammer. So even though the next candle after it is not trading above its high, it's a bull hammer, which adds to the more neutral to bullish sentiment in the short term, which progresses relatively quickly with the next few candles quickly closing higher. Then once again, there's influence from a recent gap down, but this time strong selling volume isn't persisting, and price has stayed far above the reversal point from the inverted hammer. So there's actually progress to fill in the gap, which expectedly leads to another sharp drop to continue the long-term bearish advantage. This next chart example begins with somewhat of the opposite situation, in that there's an emerging uptrend and a recent gap up, which could actually not be filled in the near future, due to the appearance of an inverted hammer that also has bull hammers before and after it, to also add an element of morning star price action, which has a highly noticeable bullish effect in the short term, which makes sense since candles are short-term context, just like this bearish shooting star reversal candle, which as we know is the exact same structure as the inverted hammer, but the bearish shooting star's upper wick signals bullish weakness after price has risen rather than bullish intent after price has fallen. In comparison to candle patterns, the gap structure is more medium to long-term context that favors firm support once it is filled. This is in part why the otherwise normal-looking inverted hammer has a slightly longer lower wick, since it forms within the gap fill region. Although there is some delay for price to move over its high, the chart makes up for this with strong bullish closes higher over the past 3 candles. But unfortunately, that doesn't stabilize the chart, as bearish volatility immediately returns. Again, there's another inverted hammer with a longer lower wick than normal, due mostly to price briefly contacting the firm support area where price is pushed back up to close higher. From a bullish perspective, lower wicks in this support area are a good sign, as it means price is being rejected out of this area to continually close slightly higher towards the second half of this double bottom reversal. Now to an ETF chart example, where there's intent to drive higher with this longer upper wick from a candle that has some inverted hammer characteristics. However, not much comes out of it other than a minor delay to the downtrend, not so much because it has a larger real body than normal. In part, it has to do with the candle being red and having higher than normal selling volume, though the main reason is the candle following it also has high selling volume and strongly closes below its low. In contrast, these candles have price immediately begin closing above their highs to promptly confirm the bullish intent that initially began from their long upper wicks. Although the real bodies of these candles are smaller than normal, it's not an important feature compared to the long upper wicks, which are the main focus here.